Hello, everyone, and welcome to the Innovators series, the first of the series for 2025. As the tech said, I think for Citi colleagues, you can share questions via Slido, #Innovators. So we'll look forward to that dialogue later on in the session. And Innovators series is a Citi Ventures virtual event series where we bring together innovation leaders from across Citi as well as from the outside world beyond to discuss top trends and technologies impacting financial services. By way of introduction, I'm Arvind Purushotham. I'm the head of Citi Ventures, a team that's focused on catalyzing innovation at Citi. And one of the ways we do that is by investing and partnering with leading startups that are revolutionizing financial services relevant to our business units, relevant to our firm. I've been at Citi for a little over 14 years and have seen sort of the financial services world, change significantly in that time. You can say almost sort of revolutionized with the advent of all the underlying technologies that we have seen change. And it's exciting for me to talk about that today with Ronit. A vital part of our work at Citi Ventures is tracking the key trends and technologies that drive innovation in the startup ecosystem and bringing that insight to Citi to share with our partners. In fact, we share not only with our internal business partners, but also external parties like our clients. And we want that to benefit the firm as a whole. And we do that through a few main channels. This event series is one example. We also hold larger scale events like our upcoming Gen AI Summit in June that we are organizing in partnership with Tech and Comms Banking. We also have a monthly internal newsletter where we talk about not only the investments that we make, the theses behind those investments, but also thought leadership articles on trends that we're seeing out there. And so in a variety of ways, we're trying to bring what we see in the startup world into Citi to benefit our partners. Joining me today is to discuss the top trends of 25 is another leading trend watcher, Ronit Ghose. Ronit is a Citi colleague. He's the head of Future of Finance for Citi Global Insights, Citi's premier thought leadership unit. Ronit, welcome.
Thank you for having me.
Absolutely. And Ronit and his team researched the intersection of the future of money, of finance, and emerging technology, and they provide analysis and advice to Citi's clients and the bank's leadership. Their most recent report, which was one of the bestsellers, and I know this just from knowing your work, Ronit, was perhaps the #1 tech trend of 2025 so far, Agentic AI, and I know that we will get into that later on in this conversation. Prior to his current role, Ronit was Citi's global head of banks and fintech research. Alongside his Citi role, Ronit's an advisory board member of the Financial Technology Center at Imperial College Business School in London and at several technology firms and early stage VC investors based in the UK, Asia, Middle East, and Africa. Ronit has been at Citi since 1997. I think he joined from high school. Ronit worked in the policy world, including as a research assistant for a former UK Prime Minister. Ronit's new book, Future Money, was published in 2024. Thank you for joining us today and for sharing your expertise. And for those of you watching who haven't attended an Innovator series, we'll spend the next 30 or 40 minutes discussing the trends that each of us is watching, and then we'll open it up for Q&A from some of our Citi colleagues in the audience. So with that, let's dive right in, Ronit. Starting at a high level, what trends are you all looking at most closely this year? Maybe talk a little bit about that.
Sure, and thanks for that very generous introduction, Arvind. So you mentioned AI. It's AI. Very much looking forward to your conference in New York in June. AI is going to be, for this year, a key trend. In January of this year, we published a report on Agentic AI. And what we did in that report, in partnership with actually a lot of Citi Ventures portfolio companies, was we dug deep into what's being built right now, both by startups and also large hyperscalers on putting AI into action. And it's going to be a fascinating 2025, 2026 in watching agentic AI go into action. We're still tracking Gen AI, and I know my colleagues in ventures, Arvind, and your team, you've invested in many, many companies in the Gen AI space. We'll talk about those in a second. So from a technology perspective, it's very much AI driven. From a policy perspective and maybe a political perspective, there's a lot of interest again in blockchain and tokenization, given the administration change in the US, and looking at how can we put into practice in the financial world, or what's often called the traditional financial world and the TradFi world, how can we put blockchain into practical use case across all the different verticals of financial services? So I'd say those are the two big trends. AI driven by technology and business development, blockchain and tokenization driven by policy.
Very exciting, and agentic is a major theme for us as well, as you know. And there's an AI trend that we're calling Gen AI reports for duty, which is very much a part of that trend as well. For those who haven't had a chance to read the GPS report, maybe you can explain what agentic AI is and specifically on its impact on financial services.
Absolutely. Agentic AI, think of it as the latest iteration of the do-it-for-me economy. Very simplistically, AI is a machine or a piece of software that imitates us as humans. Generative AI is software that creates text, video, and layering on top of that is agentic AI. That's AI in action. It puts generative AI into action, autonomous and semi-autonomous. Now, in financial services in particular, for all of you colleagues, clients, partners, we work in very large, often organizations full of workflows, full of processes. And a lot of the roles, the tasks more than roles that we say outsource or offshore, those tasks and roles are tailor-made for replacing or augmenting, in most cases, with agentic AI. For startups, it's a different game. For startups, there's a chance of actually, building new business models. Arvind, you're based in the Valley, so I'm sure you've come across this topic. The one-person unicorn, or the more likely the 10-person unicorn. The idea that the future startups will be much smaller companies. They'll be able to scale up much faster. You're not going to need 100-person teams, but you're going to need 10-person teams. And many of the new businesses emerging maybe will be run on scale of a WhatsApp or a Telegram or a Tether. They're going to be much smaller companies that can go global faster because of agentic AI. So super, super interesting times.
Yeah, that's actually an excellent point. I mean, we definitely see the conversation around the 10-person unicorn. And then you see companies like a Cursor and others who have grown dramatically over the last year. And they don't have a lot of employees, and they've reached 100 million ARR or revenue run rate and beyond. And so when there was talk about this, because of coding agents, because of copilots and such, let's say 18 months ago or 2 years ago, a few months after the initial advent of ChatGPT, I saw a lot of skepticism from experienced software managers that said, hey, I'm not sure, maybe it can help with low level tasks, but not with higher level tasks. But that tune has changed, in 2 years. Of course, the technology has also improved dramatically, but I think many people in that world didn't, in fact, see how quickly technology will improve to the point where now you have experienced software managers saying we can, improve the productivity and get things done faster by 20, 30, or 40% because of software agents and copilots.
Yeah. And in a year or two, the pace of change is so dramatic. Literally half an hour ago before this video call, I'm based in Dubai. I'm doing this call from our DIFC offices. I was downstairs in a coffee shop chatting to a startup based out of Singapore, who are building agentic. They've actually built agentic AI workflows of consumer and wealth. And he was explaining to me how this is all built in the last 6 months and is going into production with some of their clients right now. And a lot of this is a lot of the work that takes place in large organizations, white collar organizations, can be quite repetitive. I mean, we all love to focus on the creative parts of our jobs and the exciting parts of our jobs, but there is a fair amount of, particularly in large organizations, financial institutions, process repetitive work. And if some of that or a large part of that can be replaced by software, that sounds like a win. Hopefully, those people can be redeployed in other areas. But there's a lot of processes, whether it's in onboarding, in operations, in finance function management, treasury function management, that are that are tailor-made for agentic AI solutions. Arvind, of course, you know, you guys in ventures have invested in some of these companies, right? If I can call out a couple in this time zone and further east, there's Exos you've invested in, Finmo you've invested in recently, and these companies are right now building and helping some of our corporate clients and partners basically redefine some pretty um, basic, boring workflows to make it more efficient, make
That's
it
right.
more productive.
I think to sort of connect the dots here from a trend that we were talking about maybe 7 or 8 years ago. We used to hear this term RPA, or robotic
Hmm.
process automation.
Yep.
That had mixed success. It was not very successful because it couldn't adapt to a changing environment. There were some companies that came up in that first round of RPA that are, adapting now themselves to with sort of the Gen AI world. This
Mm.
is almost the third generation of it, right?
Yeah.
Because of the availability of LLMs, because of agentic architectures, I think you can take that to the next level and truly automate now what's happening. And for people trying to think about what agentic means um,
Mm.
within a professional services environment or a financial services environment like we live in, but in lots of different industries. I think it's the equivalent of sort of the autonomous driving or full self-driving that Tesla
Totally.
has, right? Like, what is that?
Yeah.
What's the equivalent of that for knowledge work, right? And that's
Yeah.
sort of what brings it to life. I think from our standpoint, again, we're in year three, like the whole world is in year three of that Gen AI era,
Yeah.
and we're calling 2025. We're thinking of 2025 as the year of integration, right? So there was
Hmm.
experimentation, there was some exploration, then there's
Mm.
year of integration, and this is very much in partnership with Citi's technology organization and Citi's leadership,
Mm.
which has been leaning in into sort of exploring AI. Our head of technology and business enablement, Tim Ryan, has been leading the charge here for the last several months in terms of bringing Gen AI technology into Citi. And Citi has launched two internal products, Citi Assistant, Citi Stylus, in addition to a product for software developers, and all of that is happening while the external market and the landscape is changing. And when we think of sort of AI and sort of Gen AI, the
Mm.
analogy that I think about right now is databases maybe 40 years ago. Um,
Hmm.
and what do I mean by that? It's very hard technology. It's important technology, but you have a number of providers of that technology out there, and
Mm.
more newer ones are coming up. Um, there was no open source 40 years ago when the oracles of the world were coming and growing rapidly in that era. Now we have open source as well, so you have open source models like Llama and others. And
Mm.
so the technology is widely available. And so what does that mean? What we're looking, especially since we're strategic investors and we're trying to bring that technology into Citi, we're looking for sort of the software layer that's on top of the LLM to see
Mm.
if there are workflows, context, domain knowledge, et cetera, that's wrapped in that software around an LLM to actually add value to our businesses, to our functions, to our ops people, and so on and so forth. Every financial services institution has, tens of thousands, maybe hundred plus thousand people in ops, certainly for the large global ones. And so if we can augment their work with AI, I think that actually it brings a lot of benefit to the firm and a benefit to the people as well. So in that vein, we've invested in a number of companies, especially last year was a quite active year in the area of Gen AI. One example is a company called Norm AI. They've built compliance agents or legal agents to review compliance to sort of the relevant regulations in any given area. So, for example, if a financial services firm wants to send out marketing material, all market material needs to be reviewed by compliance teams to make sure that it not only adheres to the internal policies, but also to the relevant regulations and laws that are out there. This takes this takes a lot of effort because you have to go through every line, every word before you put any piece of material out there. If you can augment the work of those lawyers and legal teams with a bot, and Gen AI is actually perfect for it, then you enhance the productivity of that team by several fold. And so that's the belief for Norm. That's how they got started. And if you think about financial services, we have that need in front office, back office, and everywhere in between. And I think that's an example of a company that's innovating in that space.
Yeah, almost every process we have, and of course, my part of the organization, both the current part and also the prior role I did in research, any sort of knowledge work, and most of us in some way or the other are doing information management, information analysis work. It's like having, I always feel it's like having a infinite number of junior analysts or associates working for you doing the entry-level legal work or the entry-level financial analysis work. I mean, that does raise a lot of interesting questions as to how many jobs there are going to be with those entry-level roles and who's going to be doing the training of those roles. But for large organizations or even small organizations, I think it might be even more powerful with small organizations, the ability to turbocharge their growth. Just like you mentioned databases, Arvind, before, but I'm thinking the whole catalyst from cloud that gave all the fintechs and startups that we've kind of dealt with in the last decade, 15 years, got a real boost from having access to cloud services. Had they set up 25 years ago, the amount of capex they would have needed, the amount of people they would have needed, was dimensionally different. And just like cloud gave those fintechs, neobanks, other startups a big boost, I think this wave of Gen AI and Agentic AI gives a huge boost, another catalyst to, just like we went from capex, so capex turned into opex turns into software subscriptions. We sort of substitute, augment wages with software subscriptions. So I think there's going to be just another catalyzer of growth of new companies and hopefully re-engineering existing large companies. There's a separate question as to what happens to, say, 5 or 7-year-old startups that are almost pre-AI. They can get to AI before they can get disrupted or competed away by the new generation of startups. So very, very interesting times.
That's exactly right. The cloud analogy actually is perfect, and maybe it's sort of the extension of that's going on right now. If you pick a 20-year period, like between 2001 to 2020, in Silicon Valley, we funded a number of software companies to start and launch a software company and get the initial product out there to customers. Was about a $5 million exercise, US. And that has gone down from 5 million to 500,000 to 50,000 because of cloud, right? So anybody can go and set up an AWS instance. This is going back even 10, 12 years. You can set up an AWS instance and launch something, and actually it was quite scalable. So it went down by 2 orders of magnitude. And now on the development side, when it comes to developer productivity, when it comes to product, when it comes to getting customer feedback, when it comes to marketing, like all the front office functions, and as you pointed out, a lot of the knowledge work, you can then maybe take it down a further 10x lower, right? And so there's this incredible 2 to 3 orders of magnitude reduction. And so hence we're seeing so many startups. I mean, one of the reasons why we still see so many startups out there, thousands that are getting started, every year, is because the barriers to start a new company, the barrier to get your product out there is a lot lower, and we're certainly seeing
Mm.
that. One of the companies, one of the areas where Gen AI has immediate and significant impact across the world is in software development. And so
Mm-hmm.
we are investors in a company called Poolside, which is developing a software development specific LLM foundational model. And Poolside was started by the former CTO of GitHub, which is one of the big tool
Mm.
development companies that was acquired by the software development companies that was acquired by Microsoft. And the idea there is you can use a foundational model, and a number of them are fantastic at generating code. Obviously, the development that we've seen in companies like Cursor and products like Cursor stem from the foundational models being so good at coding. But I think Poolside's hoping to take that to the next level by developing something very dedicated to it. And then the last example that I'll give you, from a wealth tech perspective is, as many people may know, wealth advisors talk to their clients all the time, every day. That's their
Mm.
24/7 job. But then there's also a need to capture that interaction and make sure that we're, for institutional purposes, business purposes, and sometimes even for compliance purposes, are capturing that information. And there's always that manual work, to your point, Ronit, of making notes and putting that into your CRM and so on
Mm.
and so forth. And so we recently invested in a Gen AI company called Jump that enables wealth advisors to capture that and do it in an automatic way,
Mm.
but also in a compliant way, keeping taking into account privacy considerations and other applicable regulations.
Mm.
Go ahead.
Actually, if I can jump in, Arvind, that the kind of point on wealth is really interesting because it kind of raised a thought in my head. If I can just segue a little bit, because at least on my side, I think on your side, we've talked a lot about augmenting or replacing more basic workflows. And what we've seen on wealth, which has somewhat surprised me, is how many almost traditional private banks and wealth advisors, so not like next generation internet native companies, but companies that have been around for a bit like us, several hundreds of years. I was in Switzerland earlier this year meeting clients, and also last summer after we wrote our previous report, GPS report on AI, which is more Gen AI focused. We were sitting down, I think it was May or June last summer, late spring, with some very traditional Swiss private banks who had already begun to roll out Gen AI because what they found was as well as kind of information summarization management, it became a really useful tool for the advisor because one of the challenges we all have compared to maybe when Arvind and I started our careers is information is so readily available. So if you're an advisor, whether you're a wealth advisor or another, getting an incoming client call is often a moment of little anxiety because you don't know what you're going to be asked. And what you don't want to do as an advisor is say, hey, I'll get back to you. And what I've found is a lot of these traditional private banks have embraced Gen AI tools where they still got the human advisor because that's what you're paying a lot of money for. But the human advisor is now augmented with a Gen AI tool. And you're seeing this in the US. I mean, many banks have rolled it out in the US as well on the brokerage side and the wealth side. And it's fascinating watching and the augmentation angle here. You're making the existing human just so much smarter. Kind of almost raises there's sort of academic studies done on this. The really good advisors improves a little bit, but the median advisor dramatically improves. And hopefully that means you can keep on charging the client a premium rate.
And that goes to sort of how we've been thinking about it, and how our CEO Jane talks about AI as
Mm,
amplifying the power of the people, and
mm,
that's very much the way we think about it. Switching gears a little bit and moving
mm.
to some of the conversations around blockchain and digital
Yeah,
assets. I like the way you laid it out. One is technology driven, the other is policy driven, and this one's very much,
yeah,
at least for now, right?
yeah.
Policy driven change that we're starting to see. Um, Talk to us a little bit about what you're seeing in this space, what most interests your team, and maybe
Sure.
give our audience a sneak peek into your upcoming blockchain report, which I know is in the works.
Sure. And thanks for the plug for the upcoming report. Hope to have it out in the next month or so. So, blockchain's an area that many of us, whether it's at Citi or outside Citi, we've been working on for a decade almost. Whether it's been public blockchains or private blockchains. But obviously, with a lot of emerging, what makes let's maybe just pause and say, what makes blockchain different to many other emerging technologies or relatively young technologies is that blockchains ultimately has many roles and functions, but ultimately it's about value. It's about the transfer of value. So it becomes much more closely aligned to finance and money. AI is a general purpose technology. It's a GPT. AI is like electricity or the steam engine. Blockchain's very, very much aligned to, of course, there's an identity aspect, a record keeping aspect, but it's very aligned to transfer of value. So it tends to get regulators, financial regulators, much more interested in this. So in the UAE, there's been a relatively interested or open approach to crypto, particularly here in Dubai, where I'm based. The US has obviously had a sea change, or it's an ongoing change in terms of policy right now. And I was on a call with just last Friday with a very large corporate client of ours, and these are his words, not mine. He said, because we were talking about how the finance function in this company was going to change in the next year or two, and what would it look like in 2030? And he said, Ronit, this year is about stablecoins. Stablecoins, stablecoins are like the chat GPT moment of blockchain. And I don't want to embarrass him by naming him on a live call, but that really resonated with me because a lot of times we've been asked, yeah, that's interesting as an edge case, maybe where the banking system is not working very well, or the cross-border payment system doesn't work, or someone's trying to avoid capital controls or do something nefarious. But what's the, for want of a better word, chat GPT moment? And perhaps stablecoins could be one of those big moments this year. In the crypto world, I'd say ETFs, which a lot of buy-side firms, large asset managers in the US have embraced. That's already out there. But in the more traditional banking world and the financial world, I think stablecoins could be a huge thing in the next couple of years. Now, I don't think, and we've written about this for several years now, as well as this upcoming report, but we wrote about it in 2023, we wrote about it before. My kind of mental map or mental framework isn't that this replaces that. It's not A replaces B. So just like if you're in London or in Zurich or in Tokyo, there is many ways of getting around town, right? You can take the subway or the tube or the metro or the tram, walk, take taxis. There are many ways of getting around town. I just think of blockchain as just another way of getting around, in this case, moving value. It's another rail is how I think about it. There'll be certain tasks or certain roles where it'll be just perfect, and there'll be others where it won't be particularly useful. But this is like a really interesting, important transition year for more, call it institutional or bank and large corporate adoption, because we've got European rules that have become clearer, put in place, and now we're in the process of getting clearer US rules as well. So that's why I think it's about policy. Of course, technologies continue to improve, but I feel AI is more about technology and business driven. Blockchain and crypto is more about policy, particularly US policy driven.
I agree with you on that. And so speaking of policy, I mean, we're in the US, we operate globally, but the big shift obviously is happening in Washington. And there Citi Ventures also has a digital assets team that's been focusing on it and trying to make sure that we're talking about digital assets and blockchain and crypto to our business unit partners. I think the driving force for anything that Citi does is driven by clients and client needs. And so I know that our businesses are laser focused on sort of making sure that we can actually satisfy the needs of clients. And so if you think about what's happened even in the last 2 months, if you look at the appointments for the major regulatory agencies, many of them are much more crypto and digital asset friendly. When you think about some of the regulations, some of the changes that have happened, even in the last 2 weeks. I think there's been announcements by the OCC, announcements by the SEC that enables clarity and sort of lower sort of regulatory hurdles for banks to sort of think about digital asset products. And I know that many of our businesses, especially our services business, is doing a lot of work in that space. From a simple mental model to have is anything that's in the crypto world, we look at it from the point of view of like an asset for clients to hold, perhaps, and that's kind of what we're seeing from a demand in the market standpoint. But then to your point, the last 18 months has seen a tremendous growth in stablecoins, up to about 230 billion in sort of market cap right now in stablecoins, projected to hit 400 billion this year. And so we think about the underlying causes and reasons for why there's been this growth of stablecoin. A lot of it is, what you mentioned. There are some unstable countries or economies where there's hyperinflation, so people want to keep their assets in US dollars if possible. Second is money movement, especially across borders. That immediately brings in the question of sort of AML and some of the regulatory scrutiny around it, and the security of these things. In fact, we have companies in our portfolio that provide security for crypto transactions and payments and so on and so forth. But stablecoins, given sort of the the volatility of crypto, stablecoins are a great avenue for people who want to use stablecoins as a payment mechanism. And so we're starting to see usage of that even by some of our larger clients. And we're looking at investments, as we speak, that are bringing sort of infrastructure pieces to the stablecoin payment world. And so stablecoin for payment and crypto for assets, I think, is sort of a good sort of a simple mental model to have at this point in time. And so, with sort of the new regulatory environment, we'll see what happens with stablecoin. I think the world has also learned from some of the challenges we had the last time around with crypto, with sort of well-known sort of infamous implosions of different companies and so on and so forth. And hopefully this time around, the industry or the space matures in a much more safe manner.
No, a lot of it, going back to our earlier conversation about cloud and databases, you remember, Arvind, I'm sure many of the listeners, viewers will remember the whole discussion we had as cloud emerged inside banks and with the regulators of banks saying, hey, can we put our core systems onto someone else's computers? No, they need to sit in our basement, or they need to sit in a secure facility that we control. That whole getting comfortable. 20 years ago, some of these cloud providers were secondhand booksellers, or they've emerged and they've become much more resilient, robust companies with much better governance, much stronger balance sheets, and perhaps something similar. I don't want to pick any winners here on this call, but maybe something similar will happen as those companies get better governance, better robustness in both technology, but also management, which will make the regulators, the banking regulators, and our own and other big banks' governance internal groups more comfortable dealing with them. A lot of the stablecoin, if you had to sort of just be a little bit half glass empty, a little bit skeptical, I am very optimistic about the outlook for stablecoins, but I would just kind of health warn or caution that a lot of the numbers thrown around by boosters from the stablecoin industry, some of the more excitable ones, they're not really real economy. And not knocking crypto on and off ramp and crypto trading, that's activity. Where it's regulated, it's a legitimate activity. There's a role in it. I see it. I like to echo Arvind. It's an investment activity largely. A lot of the stablecoin activity is basically to support that investment activity. The pure payment activity on stablecoin is still pretty small beer in the context of the global financial system. That could, in the next 2, 3, 4 years, with clearer regulation, better counterparties, just that could have an exponential takeoff. The real business use, whether by households or by corporates, and particularly cross-border. That could be like a proper J curve.
Absolutely.
And we'll hopefully get into blockchain I know you're going to have another call on this topic on stablecoins. We're going to spend a lot of time on blockchain as well in our annual conference in London, which happens just a couple of days after your event in New York, the AI event. We have an event in London, sort of the Citi Institute Future of Finance Conference, which we used to call it Digital Money Symposium. So that's hopefully going to happen that week as well. So we can have a double header. AI at the start of the week in New York and more digital assets and blockchain at the end of the week in London. So come along.
It'll be an exciting summer.
So we've talked a lot about AI and blockchain so far, Arvind, but there's more to the world of innovation and ventures investing. And what are you guys seeing right now in the rest of the fintech world? What are the kind of key emerging trends that you're looking at, your team is looking at? What are you investing in right now beyond AI and blockchain?
Yeah, absolutely. And as I mentioned previously, Ronit, we always think about sort of the needs of our businesses and functions, and then look on the outside for startups working in that area. One area that we've been excited about for several years, and in fact, I would say we were one of the pioneers and put out the early reports on it. Some of that in conjunction with your team is in the world of embedded finance. And embedded finance was exciting to us only because so much of the friction we see actually impedes people's adoption of financial services, and specifically within embedded finance, I think we're sort of seeing a new era in embedded lending. Particularly, you can think of BNPL and sort of the early versions of BNPL as like the first version of it, really, of embedded lending. But if you think about lending and credit in various forms, it doesn't matter what form it is. You can think of every single one of those becoming more embedded, and why is that important? And so I'll talk a little bit about that. One is we're seeing a different era in the financial services given where interest rates are, and then what may happen to interest rates in the year or two. That is a macro factor that every financial services company needs to think about. But one of the business model items that impacts the ability of fintech companies to grow, especially in the lending space, is the cost of customer acquisition, right? So when you think about the cost of customer acquisition and also underwriting, if you're embedded in somebody else's platform because they're the merchant, they're the facilitator of whatever good or service that's being transacted, the data that they have that you get, as well as the aspect of partnering with them to offer it to clients in a very friction-free manner or a low friction manner, really changes the business model. In fact, changes the long-term sustainability profile of many of these businesses. And we continue to see that. I mean, embedded finance itself is at this point not a new idea, but actually for it to come into the fore, and growing as a percentage of the overall credit markets and lending markets, it's still quite small, and I think we see that continuing to grow. So we have many companies that are serving in the space. De facto is a company in France that we're partnered with. There are many companies that we're partnered with in the US that are also providing embedded lending. So that's one area that I thought I'll point out. Second is in the wealth tech area. Citi has a focus on the wealth area and growing our investments business. We've talked about that publicly. But the other thing that we've noticed, given we've been investing right from the beginning of the sort of the fintech era in circa 2010, 2011, is sort of the arrival of tech and all the trends into the wealth area. And we talked a little bit about this earlier in the conversation as well. So we've invested quite actively in the wealth tech space, and we continue to see more activity in this space. We talked about Jump as a way for financial advisors to capture notes and client interactions for either compliance purposes, but also for business benefit. We're investors in a company in Asia called Endowus, which is a digital wealth manager. We're investors in companies like Vega, in Wealth.com. Wealth.com is a recent investment of ours. They're a digital estate planning solution, right? We're currently looking at companies in the financial planning space and looking at sort of the startup landscape there to see who has a modern stack, but can also handle the complexity of what a company like Citi has to offer its clients. And so wealth tech has been an area of focus for us. And then the last aspect that I will cover is just the globality of what's happening in financial services. Financial services, because it's a regulated industry, I think you need regional solutions or country-specific solutions in many cases, right? You can't take, it's not like a widget that you sell in one market and then you start to sell everywhere else. It's very much needs to be localized given sort of the regulatory environment that financial services operates in. And we're starting to see that, right? There's been a growth of fintech in Southeast Asia. In India, we're an investor in a lending company called Lentra. I talked about De facto, and then there's another company called Anyfin in our portfolio that are both in continental Europe, Vega in UK in the wealth management space. So this advent of fintech in all these other geographies is interesting to watch. It's relevant to our business given the globality of our own businesses, our own wealth business, our own institutional banking business, and so on and so forth. And so we're keeping tabs on it, and we have teams to be able to handle investments in those areas as well. And so this last point around globality and is sort of leads me to maybe one of the final points that I would love for you to address, Ronit, is what you're seeing in the Middle East and the North Africa region. And I just wanted to mention to the audience to sort of be ready with some questions. Our colleague Arti will come on, in a short while here to hopefully get some audience questions into the mix as well and make it a bit more of a dialogue with the audience. But Ronit, if you can talk about what you're seeing in the Middle East and North Africa region, that would be tremendous.
Sure. So as you said, yeah, I've been based here in the UAE. Citi has been in the UAE now for just over 60 years. So we've actually been here slightly longer than the country has. The country's been independent. Kind of reflects so many of the markets I visit around the world where I've on-the-ground presence. I was in Japan a couple of weeks ago, and we've been there over a century. There are so many of these countries where we've been there at least half a century, maybe a century, and each country is slightly different, particularly when it comes to consumer fintech and the local banking system. But one thing that maybe jumps out at me and that really plays into the UAE's role, both Dubai and Abu Dhabi as hubs, is the difference between Web3, as it used to be called, right? It's still called, let's call it blockchain, blockchain-based and crypto companies compared to, let's say more traditional Web2 fintech. Web2 fintechs tend to be very country-specific because laws, banking systems, client behaviors are very different. Web3 or crypto companies, in many ways, blockchain is the kind of native or crypto is a native value token value exchange means of the internet, and the internet is borderless, right? We consume information, share information, the way we move information around the world, whether it's holiday pictures or news consumption, that borderlessness is echoed and reflected in the crypto world. And here, whether it's links from Dubai and Abu Dhabi to Hong Kong, into New York, into London, into Singapore, it's a node in the broader Web3 networks. That's one thing that really stands out, that back 40, 50 years ago, Dubai was building a port and an airport, DXB, and then a port, Jebel Ali. Now they want it to be a virtual hub. That's one thing. Second thing, which of course many people will be aware of, is the outgoing capital investments. Amongst the largest investors in AI, as well as blockchain, have come out of the UAE and Saudi Arabia in the last year or two. The US still remains by far the biggest capital market in the world and also the biggest source of new companies, new startups. But there's a really interesting trend in the last, particularly since COVID, of startup founders or even scale-up founders coming here to look for capital as a supplementary source. So that'd be the second thing I'd shout out. The local consumer finance markets or fintech markets are relatively small and probably not at a global level that relevant or interesting, with one or two exceptions. And maybe one really interesting. Goes back to sort of the importance of tailoring and localization. Embedded finance and BNPL came late to this region, to the UAE and Saudi, and then really took off. It's become a really big thing. And it's become a big thing because this region is amongst the biggest users of the internet. It's often not known, particularly globally, but the UAE and Saudi and some of the other countries here in the GCC, in the Gulf, are some of the biggest consumers of YouTube, of lots of internet services. A lot of shopping, a lot of services are online. So if you're looking for payment, purchasing, financing, just makes sense that BNPL comes first online, then goes offline. It makes sense that these more natively online products, financial products, become bigger. So those are some of the things I'd call out. The role of Web3 in particular, and the talent that's come to the region in the last 5 years, the outflows of investment capital going looking for a home, looking for the best innovators, best startup ideas around the world. And thirdly, this very specific localization of BNPL, which has become a very, very big thing. Come and visit us sometime.
Well, I hope to in 2025. Excellent. That I thought was a great description of what's happening locally. And with that, maybe we'll turn it over to Arti for some questions.
Thanks, Arvind and Ronit. That was a fantastic conversation. We do have a few questions from the audience. And for those of us who are colleagues, you can dial in or log in and just vote on the ones that you'd like us to ask. But the first question for both of you is on, it's from Emilio Grande Garcia. So you guys discussed quantum computing a little while ago. Where do you see the positive impacts and then, sort of the negative impacts? What are the upsides and what are some potential downsides for us as a financial institution?
Ronit, I think that's maybe you should take that one. And I can comment after it too.
Sure. We've actually published. I wrote a very small part of the report, so I can't take credit. But if you have access to our research, or even if you don't, just look it up on whatever search engine you use. Just type in Citi GPS quantum and finance. We published a report in 2023, a very detailed report led by some of my colleagues, including Tamid, that goes into this chapter and verse. The finance, I've somewhat changed my mind on this. If you'd asked me this question a year ago, I'd have described this as a science project and an academic research and a national security project rather than a immediate pressing commercial project. The speed I think we talked about in the context of AI, Arvind, the speed of technological development means that the timeline to existing security systems being compromised, whether it's in blockchain or traditional databases being compromised, that timeline has narrowed and narrowed and narrowed. One of my big takeaways from January meetings in Switzerland, both during Davos week and around in Zurich, was the number of conversations we were having and we were hearing from our clients, corporate clients, relatively traditional corporate clients, saying, this is becoming a boardroom issue. That was a year ago. It was conversation I was having with academics and basically people who were much more on the fundamental research end of this. So Arvind, it's really sped up in terms of the importance of this topic at a corporate level. I don't know what you think, Arvind.
No, I agree with you. I think one of our jobs is to kind of watching these spaces, right? And quantum has certainly been in one of those. I think we have one investment in the quantum area. To your point about it being a science project, I mean, I 100% agree with you, even in sort of the way I was thinking about it, let's say 2 years ago. And then some of the progress, technological progress that's been announced in the last even 6 or 8 months by Google, by other folks on, sort of achieving that milestones on the way to sort of viable quantum computing, right? And so we continue to watch that space. I think you make a good point about sort of the offensive versus defensive uses of it, right? Meaning offensive, what I mean by that, of course, is for business use cases and for different kinds of modeling and optimization problems and so on and so forth. And then defensive on the security side, I think we think about it in very much the similar way. And if I were to think about sort of where we might make our first investments, it might be on the defensive side, right? Because history of the world is that like the hackers and the bad guys figure out how to use technology for bad purposes first, and so I think that the security, in fact, almost needs to come first before actual great use cases from a business standpoint. And so, but I think going back to the question, we're watching the space. We don't think that those commercial applications or even sort of security related applications will be necessary or needed in 2025, but it may happen much sooner than people were thinking a couple of years ago.
Yeah.
Great, thank you for that. And I would say there's a couple of questions that are talking about different trends that you guys have talked about or not talked about. For example, there's blue ocean ocean and ocean tech and green tech. One two-part question for both of you, and maybe Ronit, you can kick it off for us. What are some other trends that are on your radar and you're keeping an eye on, but you haven't discussed today? And how do you personally decide what to focus on when it comes to trend watching? And I do think trend watching is a little bit of a sport for those of us that have been doing that. So what's your sort of rubric for thinking about trends and how you think about what to focus on?
It's a really interesting question. Because we're sort of deluged with information, right? Whether we're just a regular human being exposed to the internet or working in a large organization such as ourselves, we're deluged with information. So how do you sort of work out the classic signal from the noise? So one of the things we do, and without like high-fiving our ventures colleagues again, but we actually, when we wrote the report in the Agentic AI report in January, it didn't in October, November start out as a purely Agentic AI report. What I did was I reached out to many of my colleagues that I talked on a regular basis, including Arvind and team, and said, hey, can you connect me to some of your AI portfolio companies, because you've invested in so many of them, and it's one of the advantages of working in an organization such as ourselves. So I got connected to a lot of these founders, and I just had conversations like, what are you working on? And that's one of the great sort of benefits of this role, whether we're in ventures or in Citi Insights, soon to be renamed Citi Institute, is we get to talk to some of the most driven, passionate, smart people in the world. And many of these founders are giving their lives literally to one particular topic. They're not picking and choosing like we can do in research. They go in. And so we like talking to people who are putting research into action, research into literally motion, rather than sitting in an ivory tower. I mean, we do also talk to the academics. And in fact, that quantum report I mentioned before in 2023, Imperial College in London and other parts of London University and some other universities around the world contributed. So we do go and talk to academics. And I know in the US and particularly in the West Coast, academics are very sort of practical and hands-on. But a lot of the time it's just going and talking to founders and entrepreneurs saying, what's really top of your mind? Where are you spending your time? What would you like to build next? That's kind of one way. And we're just in a very privileged position. As I said, there's almost 100 countries around the world. So if a lot of interesting things are happening in AI in the last 2-3 years in the US, we have access to that. If I go back to my first GPS report, sorry, GPS is our Thought Leadership series. First GPS report in 2016, that kind of emerged from China. It was very China driven. In the mid 2010s, in 2015 and 16, I was still based in London in Canary Wharf. We were watching what was happening in Asia and particularly in China, and we could see a lot of really interesting, because China went straight to mobile. But it was like a classic leapfrog. And China was mobile native And in some ways, some of those fintechs had AI back then that was mind-blowing. When it came to credit decisioning, for example, or based on cash flows. And we had access to a lot of the developments in China directly through our clients and our partners, and we just spend time there. And that's kind of how we try to trend watch, is through our network, and then just curiosity. I think and it sounds a bit sort of woolly to say curiosity, but nothing beats just keeping an open mind and being curious. Because something is going to come around. What's something that we're working on that we haven't talked about? So we've got the AI report. We're about to, in April, publish hopefully a big blockchain report with a focus on government and public sector. Actually, I don't want to promise it now, but we are beginning, hopefully over the summer, putting something out on quantum and blockchain, but it's very early days, so I don't want to give away any conclusions from that, but that's an area we are looking into.
Thanks, Ronit. And I think I wanted to sort of just pick up on what you said about talking to founders. The way we pick up on trends is we meet over 500 new companies every year, and it's global. And I think that's sort of our way of, having eyes and ears to the ground in the startup world that informs our ability to identify trends that impact our businesses and financial services in general. And so if you just look at the amount of investment that's gone into fintech vastly outstrips the R&D dollars, any new product development dollars invested in by all the big banks combined, just the scale of it. And so even in a down year, I'd say it was sort of probably beats the R&D budgets of all the big banks combined. And so that sort of tends to be the source, and in fact, the main source of sort of how we think about identifying trends for the future. Any case, watching the clock, I mean, it's been an excellent conversation, Ronit. Thank you for making your time and sharing your insights with us. That concludes our program. You can find information on Ronit and the Citi Global Insights program. You can go to citigroup.com/global/insights. And then Citi Ventures also has a website, citi.com/ventures. Have a great day, and hope everybody found it useful. Thank you.